Good morning, everybody, and welcome back to Schwab Coaching. It's our Tuesday edition of Trader Talk in today's market. I am your host, Kevin Horner. A beautiful sunny morning here in Denver, Colorado. We continue to melt off the enormous amount of snow we had over the last week. I'm glad to be here with all of you. Thanks for joining today. Say hi to my friend Connie Hill in the chat. She's going to keep an eye on things for us in the chat. Of course, I'm going to do the same and try and bring your comments and questions to the table here today. But I'm glad to have Connie here. Glad to have you guys all here as well. Everybody, I see a lot of familiar faces in chat already. Please take a moment, if you're not already doing so, follow Connie and me on X at Connie Hill CS. I, of course, am at Kevin Horner CS. And for those of you looking, just yesterday posted the result of my Taco Sunday, which was fantastic. I am working from a recipe I located online forever ago, seemingly, and made minor adjustments. So if you're interested, that is one of my most recent posts on X, everybody. The batch came out fantastic, and I love sharing that stuff with you. So check out X for those details. Now, today we are going to go through the standard paces as we often do, and I'm going to try and bring a new concept. Really, it's an old concept, a revisit of what Trader Talk in today's market used to be prior to our full and complete transition with Ameritrade. So I'll talk a little bit further about that as we move through the class. So to get started here, let me just remind you that our discussion, of course, is exclusively for your information and your education, meaning simply we do not make recommendations here. So any expression of opinion is subject to change without notice. We do talk about technical analysis quite a bit here. It's important to remember that technical analysis, just a piece of the puzzle, should be considered should not be considered as your lone approach to decision making. Simply put, we think that means you can use it as a piece of your overall puzzle, but would discourage you from using it as the only means of your research. And in fact, that extends to other areas of the market as well. I mean, if you're thinking about being a fundamental investor, we still think it makes sense to expand outside of just the fundamentals. Don't base your decisions off any one particular approach. Okay. Now, in terms of an agenda today, we are going to do the standard approach. Like I mentioned, we'll hit up the major indices. We're going to look at trends in the various sectors, some stocks in the news, as we often do. But I also am hopeful that I'll have some time remaining. And what I'd like to do is just kind of go, like I said, take us back to the beginning of Trader Talk. And the way we used to do things, we used to start the same process, and then by the end of the segment, we would look for potential trade ideas, things that could that traders might be considering, and we might do that exact same thing, starting from the look at the broadest indexes, and then down into the sectors that could be set up well, and then we'll take those sectors and then we'll start to scour within them to look for some trade ideas, see if we can get something working that way. So with that, let's go ahead and start us off with a look at the S&P 500, which had a great finish yesterday. As you can see, everybody, we have this ledge over 6,000 that we have now created. Closed yesterday above it, and it made a new all-time high at 6,017, and we are dancing on it as we speak, kind of flat for the morning right now. Of course, if you're bullish, you're looking to see that this action over the last 2 days is simply a time consolidation. Now, what do I mean by time consolidation? Ultimately, I'm just suggesting that if you're bullish, you don't want to see a lot of give back from the recent rally here. We've had a 5-day move. We've basically built this lovely flagpole like so. I'm going to go ahead and extend this up to the peak here that we just created yesterday. And so there's your pole. And now we are in the process of potentially setting up this flag. And remember, what are flags in terms of the technicals, or what do they tell us? Well, a flag is a continuation pattern, and the belief is that if you came into the flag in a bullish manner, as you can see here, we are obviously up, then the belief would be a broken flag to the upside is simply continuing what we have already witnessed. Now, it is kind of notable that we got into that ledge, a couple days ago here on Thursday of last week and we took a breather. Yesterday we finished there, or at least got up to that same level. So the high we had on Thursday of last week was 6,012. Yesterday's peak was 6,017, and our close was just on 6,001. And then today we've got that really tight range. So we're looking at basically 6,000 to 6,015 as a potential upper zone here for very, very short-term traders. Now, if we take that into the 5-minute bars and just get a little clarity from things, you'll notice that we opened right on the pivot here, everybody. So we had a pretty quiet afternoon after the original pop yesterday. Had a very tight range here, right? 6,000. Like I said, the high was 6,017, met in the morning. And then really, we just kind of danced between 6,000 down to about 59.95 for a lot of the afternoon. We just went tightly sideways. And that by itself might have been sufficient for short-term bulls to say, hey, what we've done is create a new zone of price action in here. So that's really what we're watching for, everybody. How can we evaluate short-term trade details? What are we looking for today? Keeping and holding the pivot point here at about 6,002 could be instrumental for short-term traders. If you are that short-term and you're thinking that moves through the low we just created here off the open could potentially be bearish, you'd be right in the short run. But as you can see, what we've done is simply test the pivot and hold and move higher. And so we've got a little bit of a pop here off the original open. This is pretty intriguing to keep an eye on at the moment. Watch that pivot intraday today for you short-termers. Longer-term traders, though, what are we looking for? We just got to make a new short-term high so that we've got an opportunity to see the continuation. Remember, if you're looking for bull flags to break, the bull flag that breaks early in the pattern is going to be a bit more momentum-based move opportunity than what we're seeing from those longer developed patterns. And remember further that the flag can be anywhere between 5 to 7, maybe even 10 trading sessions in creation. The difference that we're getting out of today's flag is that upward slope just kind of lets us know that there is still a lot of bullish bias associated here with the S&P 500 as we've seen since the conclusion of the election process. So bullishness here. Let's see if we can get that continuation move out of the big dog here, the S&P 500. Now, let's transition on over to the NDX. Let's see how this is looking. We've had that same breakout finally. You all heard us talking yesterday. Mike Rizzo and I were commenting on the most recent move here in the NASDAQ really separating itself because it has been a long slog here from middle July, early July into November, where we basically have just been trying to figure things out, right? A little bit of profit taking out of the tech side that had been so wonderful to the upside originally. I mean, we could talk about just the 2.5-3 month move we made from the April lows into the peak that we saw in mid-July there. That was a substantial move by itself, but it really has begun far further than that. I mean, we can go all the way back to that December of 22 window and see that the long-term uptrend in the NASDAQ has been tremendous. Well, today, in the most recent action here post-election, has enabled us to look at this as a continuation pattern and a breakout of late, giving us the opportunity perhaps to start building new positions around the breakout. We often talk about this, right, from a standpoint of process. How do we look at this? Well, there's many a trader who might have said, I need something more than we got on this first move day. Again, this was the 6th, the day following the election. We closed at new all-time highs. And by itself, some of you might have felt comfortable deploying money based on that breakout. Others may have said, yeah, I need a little more. Give me that day 2, and then I'm in. And that could have been fine as well. What have we done the last 3 days now, today included? We've just gone sideways. Yeah, yesterday we had a little bit of a tail, and yet that tail got bought up. So we had a trade through the lows of this day. This was essentially a really positive day. And yet we traded through it to the downside. They bought that up, right? So we can clearly see that bulls were still involved very strongly at that 21,000 ledge. We got bought up there, have managed to hold and push higher. If we look at this on the intraday basis, I'll give you a little extra time here. You can see, again, that week open today still brought buyers in. So there is clearly a bullish bias working here as it relates to both the NDX and the SPX at the moment. We need to see some cracks in the short-term trend before we could start to believe that there's going to be something longer developing here in terms of a possible pullback. We have not seen that, though, right now. If, for example, the pullback we get is in the neighborhood of this 0.2 to 0.4% on a very short-term basis, and that's all we needed to bring new dollars in and new buyers into the market, again, that's going to remind us that this is possibly a deeper mode of potential momentum play that could play out longer than we are looking for here, than we may have initially looked for. So, yeah, pivot points can be very, very helpful for those of you in the short run. In fact, let me just give you a little extra context there on the pivots. So for those of you, this is a 1 minute bar. No wonder my detail's a little bit off. Let's make that a 5 minute. There we go. Thought things looked a little bit squirrely for myself there. So 5 minute bars. And when the pivot we were adding in here, everybody, we do that as a study, of course. So up to your flask or your beaker, go to here. You can just start typing in to locate your pivots. There you go. And then once added, get into the gear icon. Now, initially, the default on these is the value is titled auto. And what I've noticed is with auto, what it gives you are dots for your pivot point levels. And so you might not like the dots. I don't. I prefer a more solid visual line. And I can't explain why necessarily, but I changed all my values to numerical, and then it maintained my solid line. Style of line, I thought for sure that would have been the key difference, but it didn't play out the way that I thought it was. So inevitably, if you are looking for solid lines in your pivots, you just make sure your style stays solid and then change your value to numerical. Also, default here, R3 is not a pivot that shows, so you need to have a check mark to make sure it shows. R3 and S3 by default have no check marks, so just a heads up there, not a huge difference, but if you want to make sure you're getting all the pivot levels, that's what you want to have checked. And then a reminder of what the pivots are defining, really. It's just a look at the prior day price action, open, high, low, and close, and then giving you an average or equilibrium price. And traders who utilize these pivots will do so on a very short-term basis, intraday typically, and you can possibly utilize them to define short-term areas of support, short-term areas of resistance. There are a few pivot point classes, by the way, in the Trader Talk page. If you'd like to search for pivot points specifically, you can absolutely do a little bit of a deeper dive into the pivots and how traders might incorporate them on their day-to-day look at the overall market. All right, so setting up a little bit of a bull flag up there in the NASDAQ as well. Let's see how the Russell's doing. We've had an explosive move in the Russell. The quick and speedy bull flag that I was mentioning the potential of in the NASDAQ is kind of what we saw in late last week here in the Russell. This is what I was mentioning. 2 days is all we got in that breather where we stopped this massive candle. And yeah, we closed higher here, but ultimately you could see we did pause a little bit, right? We had to see a little bit of selling that day. And then we broke out yet again. Now, I do find it notable that our high here at 24.41, that's a new 52-week high, everybody. If we take a look back on the weekly, you'll see why that level comes into play. So to this point, we managed to have missed the all-time high in the Russell 2000 by about 7 total points. But my goodness, this could be a substantial break. Now, when I say could be, it is just as likely to find resistance at that 24.59 zone as anything else, right? So many a trader will set their targets for Russell positions, as an example, to be selling into that strength. Hey, can we get up to 24.58? Can we get up to 24.60? Let's go ahead and put a limit sale at that level that we'd like to get to in the hopes that we get there. And I'd like to take a little bit off, as an example, from a position. If you've been a buyer back here in the summer at the Russell, 2000 level, for example, the price level of the Russell, well, you're up 400 plus points. That would be a solid 20% return. Maybe a trader is looking to take a little bit off up there, and absolutely could be a reason for doing so, having met resistance. Again, remember, meeting resistance does not mean reversal imminent. It just means the potential for the current rally to take a breather. And if it's taking a breather, it doesn't mean that it has to pull back, and it doesn't mean that it has to use that breather to explode or move through the highs. Either one of those scenarios could play out. So our goal is always to manage the position in the manner that makes us, as the trader, the holder of these positions, stay as comfortable as possible. Okay. That's the key component. Your individual comfort, your comfort with the amount of risk on the table. We talk about planning and process of our trades so much. It's because the comfort that you have in your position should be at a level that enables you to stick with it through some of these machinations, right? Some of these back and forth moves. You want to be able to stick with your long positions as long as possible. That's the whole concept here behind, cutting our losers short and letting our winners continue to run as long as possible. And a lot of traders have learned that when you start selling at resistance, you might be cutting off some of your upside opportunity because you're taking portions of your trade off the table. That is absolutely true. But if you do continue higher, well, all the while you're participating because you didn't sell everything, right? And so those traders are just finding that by selling a little along the way, it enables them to maintain the shares left behind even longer, simply because the risk factor associated with those remaining shares has been reduced by selling a little along the way. BJ, is it a potential cup and handle setup here? Potentially, yeah. What do we say about price patterns, though? You can call it whatever you want, but in the midst of the pattern's development, it isn't truly a pattern until it breaks in the direction that the pattern would suggest. So what do we need? We need new all-time highs from the Russell, and then we could call this a potential cup and handle. And further, if we did call it a cup and handle at that point, well, then we'd have the potential of the move to be the value of the depth of the cup, which could be, we could go to the letter from our high at 24.58 down to the lows that we've set down here at 16.31. So we could ballpark that at about 800 points, everybody. You could also decide that the biggest zone of former resistance was more likely at about 23.5 to 2,400. Do the math on this as you determine to be appropriate. But again, the math and the so-called measured moves that we might calculate, these are just estimations, just a way that a trader might look to set targets down the road. And then further, the last thing I'll say about the potential of a cup and handle resolution, we don't expect those over short-term periods. We expect the resolution to be equal to the time frame it took to create the pattern. So in this instance, everybody, if we looked at the first real peak here, when we made that last high, that was March of 2021. And then we've now broken it here in November of 2024. That's actually like a 3.5 year pattern. And so if that is in fact the case, we're looking at the potential for more upside from here, but you don't expect an immediate 800 point move to the upside over a 6-month, over a 12-month window. It would more likely be, if that were to be the calculation, something akin to 3+ years in nature. I hope that's helpful, everybody. Okay, Connie, thank you so much for sharing the playlist for former Trader Talk segments. Yeah, you can always go back in the archive and watch these. In fact, I'd encourage you to watch them at double speed so you can get through them a little more quickly. But one of my favorite things to do, of course, is to go back and watch some of those and see if what I spoke to made any sense at all. And hopefully the conversations all carry a little bit of water for you. But having watched, having had the segments and then going back in time and have the benefit of hindsight at our hands, you might find that some of what we talk about and cover here could be pertinent for your own process. So always good to go back into the archives. We're given the chance. All right, what else do I have here in the queue? Yeah, that's one of my favorites of all time, George. The market can remain irrational longer than you can stay solvent. Entirely accurate. Don't get married to your positions. Don't get married to the narrative. Don't get married to the idea that you're right. Commonly, that emotional tie for some of us to being accurate, to being right, is what can keep you in a losing trade far longer. And I have made my fair share of losing trades like that too. I can relate. Try not to fight against what you're seeing. Try to trade what you see rather than what you think. And sometimes that puts the onus on us as traders to just start reducing position size. I have come to that a number of instances where the conversation in my head is, you should have sold this weeks ago. Why are you still holding it? Well, because I need to get some of what I've lost back. And what I've learned is that is a mentality that doesn't serve me in the remainder of my portfolio. And it kind of hangs over me. And it impacts my decision making that I am doing better with. It impacts those decisions negatively. And so again, for me, it was a recognition of needing to move on from those bad trades sooner and be willing to be wrong. And once I'm wrong and realize it, move on. And even then, everybody, if you move on and thinking you were wrong about this trade, I'm going to sell out, I'm going to take my lumps, I'm going to look to move on. You got to then ignore the potential that things change immediately and the stock you've sold suddenly starts to move higher. Try not to get bogged down by those emotional ties to your decision-making process. The idea of being right is not as good as being profitable. Is one way to look at it, right? Many traders would at least tell you that that's the way to go back. Yeah. How many times have you said that one, BJ? I'm going to get back some of what I lost. Yeah, I know. I can relate. I think we've all been there, and that's what we want to try and challenge as much as possible. All right. So there's your big guys. Let's just take a quick hit on the stocks here today. We are still in the big triangle, have not gone anywhere from a decision-making standpoint for many traders. For those of you that are in the semis, you've been trading the semis, I'm sure that a lot of traders are eyeballing that 200-day moving average and then the lows we've just made in here. If I zoomed in, you can see we've got some support in here, don't we? A number of tails at this 5,000 ledge on the SOX indice here, and that happens to coincide with the 200-day moving average. So there's a bit of confluence here on that ledge. So monitoring that level could be very important for us. And then we see that the yields are climbing just a bit more today, but we've had a little bit more back and forth in here of late, haven't we? The upside moves have been kind of sold down. What we'd ultimately like to see, of course, is the break of that 20-day moving average on the yields, which have been climbing quite quickly. But things have been a bit more volatile here for the yields in the last couple of weeks. Now, I thought it would be important to go and look at some of these sectors, try and get a snapshot on some sector moves. There's been some improvement since the election in the energy space. As you can see, we've busted out and are trading again above all three of the major indices, the major moving averages, pardon me, the 20-day, the 50-day, the 200-day. And the level to which we've rallied also seems kind of pertinent. So I'm going to eliminate my downtrend line, and I'm just going to start from back here where we have clearly rallied to previously and have not busted through on the upside. So, guys, we may have the potential for energy to break out here, and this could be opportunity. So we could maybe take a look at the energy space for a potential search or scan of the market to try and locate trade ideas. That's one. Maybe there we could look for stocks that are kind of in the process of moving to new highs in the energy space. That's one option, right? Looking for stocks that are maybe leading that space higher could be one way to look at it. Let's peek in on materials, which have had a little bit of a rough go since the election, as you can see. The ledge here was at the 20-day moving average, and now we reside at the lows we've seen over the last 2 weeks. So this could be a little bit short-term bearish as we try and figure out whether support here is going to hold at around at this ledge of potential support, or do we have to get down to the 200-day moving average? It's kind of notable. We have tested, there's a bit of an uptrend line that's been working in here. And if I extended this level to the left, let me just activate it and bring it over. This has been supportive or previously had been resistance as well. So this is an important level for the materials space here, but it's starting to look a little questionable, like we might be in the midst of that short-term pullback after an exceptional move to the upside here. So maybe put a pin in that one. At the moment, could be short-term bearish if it were to trade much lower from where we are at the moment. We've noted here, boy, goodness, the industrials have finally just broken out bigly. I'm going to take this level here. I'm going to move my rectangle up to there. That becomes a potential new support zone for industrials. Industrials having already broken out might not be ideal from a trade viewpoint, simply because you have them trading at new highs, and some traders might be thinking, you know what, I'd like that space, but I'd feel better about entrance in stocks as the group were to retreat. In this case, about 30 points to major support, which is always a possibility. There's not a guarantee that we get that throwback, but it's certainly possible. And that throwback and hold of the former breakout spot is commonly a zone where a bullish trader would feel a little bit more confident to put money to work after a successful test and hold of support. We talked at length yesterday about the discretionary space moving higher. We got a little bit of a doji yesterday, a little bit of indecision, but I think many traders would point out that the volume continues to be fantastic here as we've broken out. So there's been a lot of buying in discretionary, led by some of those bigger ones. Obviously, we've seen some substantial moves in Tesla of late. So discretionary space maybe in the midst of a little consolidation here. We'll keep an eye on that. And then staples has been under pressure as we've been in the process of moving out of our defensives, right? Our leadership in the S&P was largely on some of those defensives, staples, utilities, healthcare. And since we've witnessed the NASDAQ getting back in gear, we've seen those big three, staples, real estate, utilities, healthcare, et cetera, kind of breathing over the last few months. So here's staples pulling back, but still a fairly, many would say this is kind of a, it's just a falling channel or a bullish wedge, if you will, falling into support in the midst of its pullback. And let's look at how healthcare appears here. Healthcare has definitely been in as our friend Barb Armstrong would say, a bit on the struggle bus of late. After the peak up here in August, late summer, it's just been kind of needing to pull back. And we did find and bounce at support in here, but it looks like we haven't yet corrected the downtrend that's been working in healthcare. So, doesn't mean that healthcare can't continue to do well, but it certainly bears watching in here, everybody. There's certainly been some pressure under healthcare because the expectation of potential shifts in the new administration's approach to how they're going to handle the largest healthcare providers could be notable. And it's also one of the things that I just got to point out here. I can't help but see there's this uptrend line that was working along the way. And since we've been beneath it, it has been struggle city, right? So maybe that's the level we really got to get back up above in healthcare to start feeling a lot better. Financials we talked about yesterday have been cruising as the improvement with the yield curve has kind of continued. So that looks nice from a trend standpoint. Again, maybe not ideal to be looking for opportunities simply because once more, we're trading at new highs. And again, some traders want to, as much as we like the idea of buying at new highs because it validates our thesis, you might not find the best opportunities in those. All right. Technology. Well, we're kind of right at it, aren't we, everybody? This is intriguing from a tech standpoint, given the location of these highs we just made on what would be Thursday, I think, of last week. Yeah, Thursday of last week, made that new high. Kind of looks like a short-term bull flag in here, doesn't it? But we haven't really busted that level with conviction. So a lot of that conviction has played out in other areas, hasn't quite shown up as strongly here in technology just yet as a sector. The leading details, on balance volume down below made a high when price made a high. So we could say that validates it. But we should also point out we have conflicting data with the RSI, which is giving us a series of lower highs, even though we've made a higher high in price. So we'd like to see that correct. We'd like to see the RSI over that overbought level of 70, which at the same time as price continues to move higher, would at least give us the belief that we've got a validated uptrend. We don't, when it is a little bit of a divergence here, some traders might not feel as confident with the divergence you're seeing here, but it doesn't mean it's not an imminent reversal on the table. That is not what a bearish divergence means. And likewise, a bullish divergence at low prices does not imply that a reversal to the upside is imminent either. So remember, as we often talk, these ideas, strategies, concepts, these are all about probabilities more so than anything else. We're just trying to position ourselves properly, try not to overinvest on any one individual position or any one individual approach and narrative in the marketplace. Hey, we got a survey, everybody. If you don't mind, take an opportunity to share your thoughts and ideas with me. If you just click that link real quick, it's going to place that in a browser window right next to this one, and then you can get to it post-show. Take 60 to 90 seconds. Let me know your thoughts. Things you want to see in this show as well are things that I want to bring to the table. So all of those surveys, they come to me directly, and I read every single note. Your ideas, your comments in particular, are very, very helpful for me. Please do share those with me. All right. Let's see. That was tech. Let's hit up communications real briefly. That looks like another opportunity that's holding strong. Bull flag possibly breaking today. Notice the volume has increased here quite nicely in the last 2 weeks or so as well, relative to what had been going on in here. See, the consolidation here is pretty evident, right? And then now look at the lull in volume, but that on balance volume now, as you can see, picking up as we've broken higher. So a bit of that so-called rocket fuel that some traders are looking for to validate these breakouts. If we take a further look, we've got utilities off a bit here today. Now, we are still in the range for utilities. Notice my support here at around 390 or so on this group. We are below the 20 days, so this has some of that resemblance of what we saw in, what was that other space? The material space. Some struggling of late. I think that bears monitor, as does the real estate. And of course, the XL, the real estate specifically, a little bit under pressure with rates and yields climbing. So again, we have some sensitive groups relative to rates that are going to bear watching here. If rates are going to continue to move upward, yeah, we're going to see more pressure on utilities, on real estate, and on small caps in general. Now, the reminder that I wanted to offer us today was a process by which we can approach trading or looking for trade ideas. Well, for those of you who are, looking at the S&P where we've got, potential continuation pattern, then maybe what we could do is look within the S&P 500 energy space, right? We have energy improving. We have potentially energy breaking out. And so one scan we could incorporate might just be the one that I utilize kind of frequently. Stocks moving to new highs and doing so on volume. Again, volume by some traders is considered the rocket fuel that can push or propel a move to the upside. So when we see an improvement in volume in the days leading to a breakout, it can tell us something about the potential momentum move that is possible. So the scan in particular that I'm keeping an eye on here is uptrend breakout with increasing volume. So by definition, stocks that are already in an uptrend that are now showing short-term moving averages above mid-level moving averages, in this case, a 15-period simple moving average above a 50-period, a short-term relative strength above a intermediate-term relative strength, and volume in the last 5 days, the average of the last 5 days that is greater than the average of the last 20 days, and also showing us a close that is above the highest high of the last 20 trading sessions. So ultimately, we are seeing stocks that are trading at 1 month highs. Now, does 1 month high mean we're going to find stocks that are in absolute breakouts and trading at all-time highs? Definitely not. But it does give us a list from which to work a little bit here, right? So, and yeah, Ricebird, that's a good point. Energy collectively moving higher in the face of oil not moving higher. Now, the question becomes, does oil potentially have a ledge of short-term support off of which it could move, thus potentially adding some bullish bias to the energy space collectively? That could be a narrative that some traders will tell themselves. Doesn't mean it's necessarily accurate, but as always, we want to formulate a thesis. We want to build a trade around the thesis we build for ourselves, right? The idea that we're monitoring. So let's go back to that scan tool. We'll use the uptrend breakout with increasing volume. We will scan within the S&P 500 and intersect it with the industry of energy, the entire sector of energy. And then I'm going to go ahead and hit scan. And we found 2 to look for. So that's great. It's only 2. Good given the amount of time with which we have to work, but also a pretty decent heads up that the space maybe isn't exceedingly bullish, right? Because you would think that I might see a few more than this. You could, of course, at any moment change. You know what? On second thought, Kevin, what about those Russell 2000 stocks that have just been crushing higher? Maybe we should look there instead. And then you just change to the Russell, keep it energy. And now you've got a series of securities with which you're probably a little unfamiliar. A lot of small caps are names you're not necessarily going to recognize. So anyway, I wanted to point that out as a way to look at it. Let's take a peek back at the S&P 500. I'm going to go ahead and just give us that specific list real quick. Let's look at EQT and Kinder Morgan. All right, so here you have EQT. Well, everybody. That is, let's see here. Is that a 2-year? Yeah, I think we're on a 2-year chart here. So, goodness, we are right at the same level. How about a weekly look? All right, so we're learning something here. Now, we do see, that there's a potential for this to kind of lose a little bit of steam, depending on how you break these out, right? But what about the downtrend line that was in play off of these peaks? If I just went to that nearly 52 level and drew a line through these peaks, some traders would tell you that last week we broke that, and now you've got an improvement because ultimately you had a little bit of I guess we could draw it kind of like so, right? We could maybe move this line up even and just call it what was a descending triangle that has now been broken. And on some traders, they'll take that initial trade and say, yeah, I believe in that because it broke the downtrend line that we found in the stock. That's a very lengthy window, by the way, everybody. That goes back to the September of 22. And so we are looking at what some traders would just say is a very lengthy pullback over about 2 full years, right? And so now you started to move through that downtrend line, all right? And now you've got a potential of maybe meeting some resistance here. Now, that doesn't mean that a trader is going to be absolutely ready to go, depending on your time frame. You know, if you're looking at this on a weekly basis, a trader might feel a little more confident today and last week based on this action. But a shorter term trader might just be looking at what's going on in here and saying, you know what? If we could just make a new high, I'll trade a breakout. And so maybe they're thinking, you know what? Over 45.5, or how about 46? They consider a buy stop order. Now, why would they buy higher than buying it today? Well, the potential exists that we're at resistance. There's no guarantee we're going to break through here, right? So some traders might be looking for just a little bit of belief and confidence that this is going to break to new highs. So why don't we give consideration that we would want to be in this on a close over 46, which would at least clear all of this action here from what amounts to the last 2 years, basically. And then you can start to look at it as, oh, well, if we traded from 45 down to 30, well, then are we busting out of a 15-point range? And could we, in theory, be looking for a potential 15 points to the upside if we can clear 46 on a closing basis? That's possible. Some traders would then start to target potentially 60 in a measured move calculation. Again, that is not a foregone conclusion or guarantee, but that's a way that a trader might look at that. So let's do this. First, let me take this scan, which again, I am just highlighting within S&P 500 and energy, but the uptrend breakout with increasing volume scan is one that a lot of traders who are traders of momentum are going to give consideration to. So let's go ahead and share that with you all. Again, please bear in mind that scripts shared, whether scans or charts or what have you, these are not guaranteed for timing. These are not guaranteed for accuracy, and they are not a recommendation for use. Beyond that, I want you to play with the scales, everybody. Play with the details you find in here and learn a little bit more about that scan functionality. Now, let's go ahead and place a buy order as an example trade for our example portfolio on a trade through 45 to the upside. I, as a trader, would be willing to forego the dollar a share to the upside. And trading through 46 would give me the belief as a confident trader that there's more upside thereafter. And 45 is a little questionable still, but I'm willing to pay that extra amount. And if I'm right about it, great. It gets a momentum-based move. If I'm wrong, I need to set a proper target. But I'm going to base it on that potential for a 15-point move. So I'm going to set a downside risk factor equal to no more than 5 points if my goal is to make 15. That's where I kind of fall into that $1 of risk for $3 of upside opportunity. So we're going to right-click. We're going to go buy custom, and we're just going to place this as a custom with one cancels other bracket, which again, only one side of that trade can work. So we're going to change, one side of those executions subsequent to today's entrance order can work. So we're going to do a buy stop, and our stop trigger is going to be 46 even. Our limit sale is going to be 60 even for about 14 points approximately. And again, that's because I can't guarantee that 46 will be my execution on any purchase. And then my downside risk, we're going to keep it to $5 a share. So we're going to put exit at 41. Now I'm just going to change my exit orders to good till canceled so everything lines up. And again, we're not going to get execution on this immediately. We don't want it. We only want it on a breakout move through $46. And if it happens to gap through 46, let's say it closes at 45 today and opens tomorrow at 50, we're going to be buyers at 50. All right. After which time you may want to be an adjustment to your stop order because you did end up paying more. And if I bought it at 50, well, now with my stop at 41, I've got $9 of risk. I might not be as comfortable with that. So give consideration after the fact if you gain execution as to how that might work out for you here. Again, this is an example trade for our example portfolio. Let's just make sure that all my details line up. We're going to buy, no, I don't want 1 share. Come on. We're going to buy 100 shares here simply because that fits within my tolerance. So if I'm risking 5 points approximately, and I own 100, then I could lose as much as $500 approximately. I can't guarantee that that's all I could lose, but that's what I'm striving for in building this trade. So confirm and send, making sure buying 100 EQT at a stop of 46. Again, execution can come at any price, and then subsequently I'll sell my shares at 60 at a limit or at the stop of 41. Again, I can't even guarantee the price on my sell stop at 41 either. That could happen at any price. So with that in mind, I'll send that off. And there we go. So we haven't done one of those in Trader Talk in a very long time, but I hope we at least scratched the surface and maybe gave you all something to think about in your own trade process as you maybe evaluate the example we've built here today. Big thanks to Connie in the chat. Don't forget, you've got the survey opportunity. I would absolutely welcome hearing from all of you if you don't mind devoting a little time to that for me, everybody. And remember to follow Connie and me both on X at Connie Hill CS and at Kevin Horner CS, and hit that thumbs up button for me down below. I'd appreciate that as well. I'll be back a little later today with you all for exploring Think or Swim desktop. So if you have the time and would like to learn a little bit more, don't hesitate to join me for that. Hope you all have a great Tuesday, everybody. I look forward to seeing you again real soon.